Well, good morning. It's Shooter Scott Henderson. We're going to go over primary waves, the major market August report. Of course, at the end of our presentation, please do review our disclosure. I don't want to use the word consensus, but we definitely are seeing some widespread belief that August tends to be a bad month or weaker month. Hearing a lot of noise about that. Historically, though, if we look back at the Dow Jones Industrial Average since the inception in 1896, reveals a few interesting things. From 1896 to 1986 August stood out as the top month with the average gain of about 1% compared to about 4% on average gain across the other months. The trend reversed in 1986, and since then, August has become the worst month for stock, showing an average loss of 0.07%, while the other months averaged a gain of 0.09. Now, I want to spend a second and talk about the Fed, because I think the Fed, it's important here. It can't be a political organization. We all know that. Or it's not supposed to be. So to stay politically neutral with the Harris appointment, and my assumption is she gets appointed, it'll be even more important. So don't expect a rate cut until November. So I think we're neutral in September. Now, the question is, does the market hold up that long? And based on the data that we're seeing, we can handle some more downside in unemployment, looking like it's going to tick up to about 4.2, so even 5 or 6%. I don't think it's going to be horrendous on us, but I do think that will weigh on certain sectors. And actually grasping that right this second, I haven't spent the time to look into that to see what's going to manifest from that. So we'll be doing that in the coming days. Now, my bias remains neutral, and it will until we tag 447 to the 450 range on the S&P. Now, I actually expect for this to continuation. I expect us to build out a ledge here, and then at some point we drop down further when the data is not quite so positive. There are some concerns in the Treasury market right now because a couple of the sales recently have been challenging. With that, I'm going to switch over to TLT. And basically, we're still holding this flag where we've been building out on the weekly. Really, we've done nothing. Pattern hasn't changed. We're at 50% the mean on the Bollinger Bands. So buyers or sellers are not in control here. This needs a catalyst to go anywhere. So we're going to find out next week, I think, which way TLT is going to go, whether it ends up being this three drive, drive one, drive two, and we get a third one down here around $70, or this is an XCBC pattern, which I think it more likely is what it is, because all of these drawdowns that we've gotten in this leg, all these red days, were some kind of spook, as I call it, against treasuries. Something occurred, whether it be the yen did something, or China did something, or there was some concern about regional banks, et cetera, et cetera. All right, so now I'm sure those of you who have seen our most recent major markets for August report, we've changed the way that we've drawn this out a little bit. And I've been spending the better part of 6 months playing with artificial intelligence in really enhancing my analysis. And what it really does is it gives me more time and more space, which I would otherwise not have. That ultimately is the result. So I can accomplish more in a shorter period of time, so I can be more comprehensive. That's really the result of it. So let me just review TLT. The chart suggests that we're in our final stage, cycle wave 2. The count indicates for one more lower low, possibly, like I had just explained, for that three drive pattern. However, if this is that XABC pattern, our higher low is in at that 87.34, noted by our primary wave setup on the chart, which is the green line. Now, support and resistance levels, our primary wave setup, our last one came in at 87.34, so that's crucial support. Our back test for wave 4 should come in about 103, which is here. All right. So our target for any vulture buys, of course, is down around that $70, and the end of the world is down around 60.71. I don't think we get down that low. I just can't fathom what would occur there. Now, the Bollinger Bands suggest moderate volatility only because of the look. They're sort of squeezing towards the downside a little bit. And RSI is below 50, or right at 50. on the weekly. So that's really indecisive as far as that's concerned. Now, one thing, volume is showing increased trading activity from our low. Look at the change in volume here. We have many more buyers and many more people taking profits off of these lows. So there was a lot of people trading it, especially right here. They bought into this, they sold into it at the top of it and started clearing the rest of them out. So now those are pretty much washed out. So we're starting to see some buyers. So I would expect a leg of buyers here unless the Fed goes against us. All right. Now, short-term, the price rejection and closing on the low side of the weekly candle continues bearish pressure. The potential for a three-drive pattern is still there, downside with possibilities down to that $70 to $80 range. The medium-term prediction, if price finds support, has found support, the bullish reversal should target about 103, which is right here on our, just at the top of our Bollinger Band. Now, I expect us to continue a little bit higher than that, but ultimately that's what I'm looking at as far as our extension. And we also have levels up to around that 116 level, which is noted on the chart. All right, now, the only trading, September 85 cash secured puts make a little bit of sense here because I think they're not likely going to get put to you. But if they do, it doesn't really matter in the grand scheme of things, because if we scale down and get that 80 or 75 strike, your cost average into that is going to be well priced. Just leave some room to obviously add some more down around that level. Now, I would anticipate a significant bounce down between that $70 and $80 support zone. I think it's sort of a flush that we come out of. My conclusion here is it's sort of a cautious approach. You sort of want to have a piece on going into the Fed because they're going to announce, I would assume they're going to announce more tapering or reduction of tapering, excuse me. So I don't see too much of a downside off of that, but you never know. I mean, the Fed might go the opposite direction from what we're thinking. So you want to keep your risk to the minimum, I would think, to moderate. I wouldn't go much deeper than that. All right, now looking at the dollar, we've really gone nowhere. That's the crazy thing here. We did get a decent push on these candles here, but we didn't get enough of a rally to the upside, which is surprising, not concerning, because obviously as we push more towards that 106 level, we might actually see a deeper drawdown. But right now, that's not manifesting. I don't see it manifesting. Now, the Elliott wave count indicates we have completed our primary wave 2, possibly forming a double top. It is a double top, unless we take out that high. The anticipated primary wave 3 target is around 96, which aligns with the backtest support level noted by our cycle wave 1 low of 98.50. Now, setups, resistance, and support. Primary wave setup was at 106.32 for a short. All right. Target wave 3 suggests that we're heading down to about 96. So this is a bearish count. All right. And we do have lower targets if we look at the counts down below there, because our cycle wave 3 is way the heck down here at about $84. Now, the Bollinger Band shown with Fibonacci that it's currently near the mean within the bands, indicating price stability for us. So there's really no movement in either direction as far as that's. Given the flat price action, holding prices on the high side of the range, the dollar might oscillate between that 107 to 99 for most of 2024, and that may continue well into 2025. At least the first quarter, I'm thinking. Questionable on the second and third quarter, but we'll look at that a little bit later. Midterm prediction, considering the Elliott wave analysis, a move to 96 is the most seems most probable, especially if the primary wave 3 unfolds as we expected. Now, trading selling positions on any rips to about 106 to capitalize on any resistance levels. That's about the only strategy. I would monitor a break below that 98 to 96 level for potential buying opportunities, but right now I don't have any. And my conclusion is price suggests cautious but strategic approach. Selling those rips to that 106 seems prudent, and definitely watch that 96 level. All right, going over the S&P. Now, I don't want to use the word dirty, but for lack of a better word, it's dirty. Reason is we have a leading diagonal here. Our intermediate wave 1, intermediate wave 2, which is down around 536.24 from where we are. So we've pretty much tagged it. It could be done here, but let me just jump to the wave count structure. The count indicates that the SPY is in primary wave 3 with a larger cycle wave 5. The target of cycle wave 5 is around 586. Primary wave 3 target is around 569.84. The count suggests a retracement towards 536 levels occurs first before the move to complete our primary wave approximately at 569 to 586 levels. Support and resistance. Our last primary wave setup came in at 493.86. This is a significant support level where you might consider long positions selling cash secured puts if we do get back down or any back test towards that level. Our intermediate wave 2 again should be down around that 536. Again, another support level. Target primary wave, the primary wave 3 target is at 569.84, where that vulture zone is down there around 323. Now, the Bollinger Bands, are approaching the mean in a drawdown, which suggests the bears are in control. And the one thing I'd like to note here is that when we're looking at the Bollinger Bands and the count, an ABC corrective leg, again, has 3 outcomes. What I call equality, an extended ABC pattern, which is based 25%, roughly a minimum of 25% of the move of wave A, or an elongated move, which is at least 50% of the move of A. But quite often they end up being 100% plus. So if our leg was equality, our C wave could end up being twice as long as the A leg. Now, RSI is above 70 and is diverging on the monthly, weekly, while the daily is near a 30 level, indicating oversold territory is approaching us. Once we get divergence in the RSI on the daily, this could signal a bullish potential reversal. So you want to be conscious of that. Now, volume spikes indicate significant trading activity at current levels. In other words, the buyers are coming in, suggesting strong interest and possible support. The short-term outlook, overbought RSI, proximity, looking at the weekly to the upper Bollinger Bands, potential push short-term pullback consolidation, which we're getting, a dip towards that 536, or even down to as much as 493.86, could provide a buying opportunity. Now realize our levels are really important with the S&P because you have so much volume going into these trades, and you can look at, obviously with multiple instruments that trade it, we can see the volume of where the trades are, which is part of the reason we're pulling out these numbers that we're suggesting, and a lot of them are Fibonacci extension or retracement level. Now, medium term, if the price continues in the upward trajectory, the target primary wave 3 should come in around that 569 with an extended target that could extend near 590. So we have roughly a $20 range easy to the upside to continue to extend. However, I don't feel that, and when I say feel, I get this tone like a pulse from the markets as I'm looking at all these different charts. I think the euphoria with the Mag 7 weakness, specifically Google and Tesla, I think that FOMO is moderated some. I'll just leave it there. Now, selling September 450 through 475 is best strategy. I think we could cash secured puts on any dips towards that 493. Seems prudent because we don't just flush without a catalyst all the way down. It has legs. It's a stair step up and it's an escalator down. They tend to be a little broader, and you can typically measure them from the legs up. If we have real tight legs, then typically we have less of an aggressive correction. So the current charts setup suggests the SPY is in a corrective phase with a potential for both upward continuation after that's complete, and a short-term pullback, which we seem to be getting. The target around 558 remains valid to the upside, but caution is warranted given the overbought conditions and the divergence on multiple time frames have the potential for a 50% retracement of the cycle wave. Now let me explain that for a second. Cycle wave. So wave 3. So if this is wave 1, wave 3, this is a leading diagonal, by the way. Okay, so we can be done here to the upside. We could because of this broadening wave 2, right? So 50% of the cycle wave, assuming this leg right here, comes into about 525. So we would be doing nothing wrong, technically, if we took out 50% of that leg. And realize Mr. Market is always looking for that 61/8, right? And retail traders are always looking for that 78 cent. So we always have to keep that in mind as we look back. All right, let's take a look at the NASDAQ. Now, I threw in a trend support line before. We've broken below that. Looks like we're going to continue a little bit lower to 447, which is our intermediate wave 2. And now, again, that's becoming a leading diagonal. The only good thing about having a leading diagonal there is we have a good idea what it's going to do. So the chart indicates that the Q is likely in that intermediate wave 2 of a primary wave 3, approaching its conclusion around that 447 level. I'm viewing this as an equal ABC. An extended retracement would be minimum of 25% of the move of wave A, like I suggested, maybe around 417. Added to wave C at the time that occurs. An elongated retracement would be roughly 50% plus of the move in wave A, roughly down to about 385 added to wave C as it would work. So that gives you the rough levels of what I'm visualizing as equality, an extended ABC, or an elongated ABC. Now, wave targets, back test intermediate wave 2, again, equality is at 447, extended is 417.38, elongated is at 385.74. Target wave 3 is about 502.08. Key levels and indicators, the primary wave set up long came in at 470. Now, obviously, that's great long entry, which we're probably not going to get now, but we want to note that. Support and resistance, the 50% fib is 448.70, 382 fib is 402.76, the 236 fib is 345.92. Now, that is measuring the entire leg, all right? Not just a Fibonacci extension tool on one particular leg. Now, our vulture prices come in around 324.11. I don't think we get down that low, to be candid with you. We're definitely not going to get anywhere near that end of the world here. We need a bigger catalyst around that 258.75. Now, the Bollinger price is at the third standard deviation, which, and appears like it wants to overshoot. What I mean by overshoot, right, is that it's going to flush past those levels. Now, that is noted on the daily, not on the weekly chart here, just for that point of reference. Now, RSI is below 30 on the daily in what appears to be a bottoming pattern in a bullish impulse primary wave. 1, 2, 3, 4, 5 are the waves in an impulse. Now, market strength in key stocks, the weakness in major tech, Apple, Microsoft, Tesla, Meta, and Google, to be specific, I think will continue to weigh on these markets. The only strategy, given the analysis, is sell September 400 cash secured puts. Now, note, I'm giving us quite a little bit of room, right? Only because the 425s, obviously we could actually come down to that level. So the short-term outlook, potential retracement of $30 from the recent highs suggests a pullback to that target range, 447 to 385 level. Medium-term prediction, the continuation of that primary wave 3 once the bottom is in towards that 490 to 502 range, 490 to 502 range up here. All right. Now, my conclusion is the Q is building out a leading diagonal that should end with a primary wave 3. The correction phase is not over until at least 450 is tested. We've gotten 455.42, I think. Given the market strength in major tech stocks, a dip towards 425 could present a good opportunity to sell some cash secured puts. And that's sort of where I want you to keep your focus. All right, let's take a look at the Russells. I'm still viewing this as an ABC pattern. So, this is our A, this is our B, and our C will bring us down a little bit lower. It could just be a flat, though, to be very candid. But let's go to the technical analysis. The current wave structure, the chart checks that I am in, is currently in corrective phase with a potential move towards the end of the consolidation range. Wave C target, the analyst indicates that wave 3 is likely to reach around 176 before experiencing a brief bounce. So, once that drawdown occurs, and I think it's going to be regional banks that bring this down. It's, the Russells is telling us something here. So our target of wave 2 is fairly shallow at 210. Our back test is 220.32. So the 220.32, the 210.11 as far as the back. So, excuse me. The impulse is down to 210 and the back test is 220. I said that in reverse. Sorry. Now, I've got multiple Fibonacci levels all the way down here. And to be very honest with you, AI just pulled them out, put them into text for me, and I cut and pasted them. Made it nice and easy. Didn't have to verify those levels, even though I did. But all right, so the vulture level's down around 162.78. The end of the world's down around 118.27, representing the worst case scenario. Don't think that's going to happen here. Bollinger Band is at the second standard deviation, which appears to be testing resistance now. What I mean by testing resistance, second standard deviation, third standard deviation is up here. Note that we have only crossed the third standard deviation in this leg here. Everything else was below the second standard deviation, all the pump. So what do we do? Retrace. What do we do? Retrace, 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 retrace. Why should we change? That's sort of my MO. All right. RSI is currently around 50. So, basically neither buyers or sellers are in control here. I have no suggestions to trade the Russells here because I'm really not keen on taking longs because it's already pushed higher than what my analyst suggests. So, at that point, I sort of go to the sideline. I wait and see what happens because when it's not performing and acting the way that accounts suggested it is, which is the history of buyers and sellers, then something else is manipulating it. And this has got to be the funds trying to generate capital in small caps because they were selling into that rally in the tech stocks. We all know they were. So the short-term outlook, like when we move towards the lower end of the consolidation range down towards that 176. And when I say consolidation range, this really is this push right here. 176 level is what I'm talking about back around 168. So I think with this breaks down, we get an ABC pattern. So we get a flush back towards that 382, then a little bounce, and then we continue towards lower and find our bottom. How that structure is going to manifest in detail, I really can't tell you, but that's sort of my thought. All right. Now, the medium term, if external factors, are consequential, such as the White House lending a rescue plan materializes, to bail out the bank, we could break out from that 220.32. This number right here. I mean, we clearly could get a breakout here. And that would put us up towards about 300. So I want to always consider both sides of the tape when we're looking at a stock. So, but for the moment, and we've been here for, 4 months now, where we've been looking at the lower side of this leg. And, obviously we've been sticking to the high side because of the push in the other indices or index. Now, the medium term is, my conclusion is IWM is expected to test the lower end of the consolidation range at some point. I can't tell you when. Could be now, next year. It might not be until 2026. You can't review. Now, that should garner a rough bounce off that 176. So just monitor key levels and support at this point is about the best you can do. All right. Looking at IBIT. Now, one thing that I'd like to note here is my equality for our back test on wave 2 at 29.72 did not manifest. So now, hypothetically, the scarcity of Bitcoin is a factor. To be very candid, I don't know how to apply that to Elliott because historically that hasn't existed. All scarcity in a majority of the other markets, whether it be treasuries, whether it be stocks, is manipulated to some degree. But let's go through the rest of my count here, technical analysis. IBIT is consolidated within the range of that 42 to 32, basically what looks like a flag, forming a flat pattern rather than a flag, I think. Backtest wave 2 is that 29.72 that I mentioned. I still think there's a likelihood that will occur. However, it's diminishing as we continue to hold these prices. Intermediate wave 3 projection reaches around 62.32 from 34 from where we are. Now, our resistance levels, just stepping up the 236 is 34, 382 is 37.42, the 50% fib, which I love so much, that 39.80, and the 61.80 is at 42, 78.6 is 45.57. The vulture level is back down to 22.29. I don't expect to get there. Right? I mean, we could, and then the end of the world price will be down around 750. That's a back the truck up moment. Don't think we get that. The Bollinger Bands are at second standard to be testing the resistance now. This suggests a bearish leg could occur back near the 23.6 fib extension. Now, one thing I feel that's ironic here, even with this push in Bitcoin, our RSI level here is still around 50. So neither buyer or sellers are in control here. And that's an important factor. When I speak of FOMO, fear of missing out, or FOL, fear of loss, those are major factors in short squeezes or flush. So when that's not occurring, it's not favorable to add positions. Okay. However, considering our price levels, right now we're projecting, I think it was 88,462 at Bitcoin by the end of the year. And then we were projecting 117.33, 370 something, I think it was, for 2025. And we might raise those levels. But when cash secured puts become available, obviously that's a no-brainer for me. Right at price, selling quarterlies, I really, or the bottom of that flat pattern, the lower side of our price, in this range here, makes a lot of sense to me. I just wish we had those. Obviously, other than that, manage key levels. You're definitely initiate a new position if you haven't one. Initiated one if we get back towards that 29. The short-term outlook, potential deeper retrace back towards that 29, and ultimately we will move higher, I think, in either case. I don't think it really matters. The retrace might just extend our leg higher. Medium term, the completion of intermediate wave 3 targets around 62.34. Once that consolidation pattern resolves and we break out. And IBIT is still in what I consider a consolidation phase with that potential deeper retracement. Despite the outlet, it remains bullish, and I expect us to test higher prices at some. But that's what we have for this week, folks. Hopefully you like this new format. I wanted to be a little bit more detailed. We're at the moment, this detailed format is only going to be out in major markets, only because of the time involved to put this together. It added about 2 hours to my prep to put this together, but I felt it was much more comprehensive. And considering that we were doing this once a month, I wanted to make sure we provided the support that, above standard, above par, as I call it. But great trading until next time.